Hey everybody, it's Brian Shannon here from Alphatrends.net. Today is Saturday, the 23rd of November, 2013. Let's look at these markets. They continue to defy the skeptics and close at all-time highs here in the S&P 500. We were up 0.5% this week. NASDAQ just scraped by with a positive. The Russell 2000 was up close to 1%. Semis down a little bit, and financials really outperformed this week, and now they are up 31% year to date. So let's take a look at the action on the chart. S&P 500, we still have a rising 10, 20, and 50-day moving average. We are innocent until proven guilty. And we had seen that the 177.5-ish area, our prior level of resistance, was tested here this week and held as support. And we rocked higher here basically on Thursday and Friday. After being cautious coming into it, we were making lower highs and lower lows. So the intermediate term gave us a little bit of reason for concern as we did break below this 178.50. But we didn't stay there, and the market was able to claw back, and of course, we had closed at all-time highs. So it remains innocent until proven guilty, and about 178 is going to be the key level to keep an eye on next week. Of course, we have a holiday-shortened week next week due to Thanksgiving, and that'll mean lighter volume, but only price pays. So let's stay focused on price action as always. The NASDAQ 100 still obviously in an uptrend here, rising 10, 20, 50-day moving average, and up at highs not seen since really in more than a decade here, of course, about 12 years. So we're closing in on this prior support area. Doesn't mean it will be resistance, and we're actually at that level, I should say. But we have a pattern of higher highs and higher lows. Now, one thing that was a little bit concerning earlier in the week is that it looked like we were breaking out to a new high, and that from that failed breakout might come a fast move lower. However, the market did recover, of course, on Thursday, and we continue to be up at highs not seen for several years, over a decade. So it remains innocent until proven guilty. I don't know what's going on there, but we'll see. 83.50 is what we're going to want to see hold as support this week on any pullbacks. That'll be our first level to keep an eye on. The Russell 2000 up at an all-time high as well. It has broken this resistance here that we'd seen at about 111.5, and we had a higher low this week, which really, you could kind of say that this was a shoulder, this is a head, and this is a shoulder, that we had an inverted head and shoulder pattern. Inverted head and shoulder pattern is supposed to be a reversal after a downtrend, but it can be seen as a continuation pattern as well. But the fact is, we just remain innocent until proven guilty. We've got rising 50-day moving average. We've got that 10 back up through the 20, and we're at all-time highs here. So again, it's difficult to listen to anyone seriously who's talking with a bearish tone while we have this market at all-time highs here. So, next week, this is going to be the key level to hold, 108.70, but that's 3 points away. So I think that, looking at a shorter-term time frame, we'd want to see that the prior resistance we were looking at, that is the 110 to 110.5, this has been a prior important level. Let's see if that holds as support first, but we remain innocent until proven guilty. Give the benefit of the doubt to the buyers in here. Semiconductors, again, they were down, but they're really within this range here, and it looks to me like we've got some energy building within this triangle and a primary uptrend. When we look at a consolidation on one time frame, such as this, and we say it's neutral, well, we tend to expect that it will break out in the direction of the primary trend, that is the trend on the bigger time frame, which is clearly higher here. So it wouldn't be a surprise to me to see that the semiconductors break out of this consolidation here in the next couple weeks and do continue higher and close near the highs for the or continue to make new highs for the year as we head into the year end. The financials, of course, broke out a week and a half ago beyond that 21 level. They kind of stalled there a little bit, tested that prior resistance, and that resistance did hold as support, and we've seen them continue to move nicely higher here up to multi-year highs and coming into levels that we saw from 2008. So, it would make sense to maybe think that this is a band of resistance, but until we see some resistance actually shown in there, I wouldn't pay too much attention or be looking for, certainly wouldn't be looking for reasons to try to get short. There's nothing here justifying a short position, not when we have a rising 10, 20, and 50-day moving average. We have a rising 5-day moving average. We saw this market tested and hold. So we've got higher highs and higher lows. Our initial support level we'll want to see hold early next week would be about 21 and a quarter. And then just down at about $21 a share. But it looks, again, innocent till proven guilty. We were talking about gold and the fact that gold was in that triangle, and that it seemed as though the triangle should break to the downside, and that we would likely see a test of these lows. And we were talking about, well, we've been talking for a while about the Fibonacci off of, I believe, these lows, and coming down to at least that 50% retracement once again. So gold is still in a downtrend. It's guilty till proven innocent. If they don't scare you out, they'll wear you out. Lower highs and lower lows. Stay away from gold as far as trying to pick a bottom. The bonds, were down slightly this week here. Some people were calling this a breakout a couple weeks ago, and I had said, been pretty skeptical, because we have still on the weekly, time frame, we still have a pretty ugly pattern here. That suggests we could continue to see lower prices, as we saw this bigger head and shoulders pattern on the weekly time frame and the break of this neckline. The height of that really, what we could call it, about 132 down to about 112. So we could say that was 20 points from this 117. That would give us a price objective down near about 97, and I still think that's possible. We've got some consolidation, but again, the primary trend is still lower. So in my mind, it's guilty till proven innocent. Apple really still continues to hold up above this prior resistance here on the weekly time frame. It was kind of sloppy trading this week in Apple. It looked like maybe it wanted to go. It didn't definitively get above this prior little resistance, and we came into the week saying if it got above this 530-ish level, that it seemed as though Apple would have the ability to be able to continue to move higher. It didn't do that. I think that it's still building some energy and worth keeping an eye on, but it appears as though about 530 will be the key level for it to break beyond for next week. Tesla, no recovery in there. It continues to be intermediate term downtrend. Perhaps we're going to see the 200-day moving average tested. That's down here at about 110. And I had spoken last week about the volume weighted average price since the beginning of the year as a level to watch for potential resistance. That obviously hasn't meant anything. We can take a look at the Fibonacci based on the year to date and see that we're a 50% retracement would get us down towards about 114, and we have that 200-day moving average. So it's still declining. There's no reason to look for anything more than day trade opportunities in a stock like Tesla. It's guilty till proven innocent, and we're going to talk about some real good stock setups on the next video here that'll be on the site Sunday evening for subscribers to Alphatrends. If you're not familiar with the subscription service, I would encourage you to take a free look. And if you're not around next week, then happy Thanksgiving. Enjoy your holiday. I took mine early this week, so thanks for tuning in, and good luck in the markets. Thanks.